Okay, Assalamu alaikum and good morning, good evening, or good night, wherever you are. So for today, obviously this is based on everyone's request that they want to know exactly how we do multi-time frame analysis on entries, where we where we put our TP points and our stop losses and stuff like that. Okay, so this is obviously a much more in-depth of what you have already learned in the basics, because basics is more on how you identify signals and setup. Okay, so this is much more on when you have identified all of those things, then how do you do entry the market? Okay, so first of all, as I always mention to everybody that um, when you when you want to start trading forex, you need to be able to have um, some sort of preparations, because trading forex is not a hobby or something like that. You need to be much more professional in a way that you have prepared everything in accordance to what you're trying to achieve. Okay, because when you don't set your goals, you don't know where you're going, and if you don't know where you're going at this particular business or forex trading, then it's much more on the gambling side of things. Okay, so what I usually ask everybody, that if you haven't have any some sort of money management system that you have in place, then I highly suggest that you do, because if you don't plan anything, then you're not really trying to achieve anything else, so you don't know how to gauge your achievement so far. Okay, so I just covered the one on the side. So let me just share this Excel spreadsheet. Hang on. All right. So over here on the right hand side, I have four important things that we need to make sure that we have covered. Okay, because um, if you don't have any set plans, set goals, and objective, then there's no way of gauging your achievement so far, and you don't know where you're going with this forex trading. Okay, so the most important thing, first of all, is when you do have your basics already at the back of your head, when you know how to identify signals, when you know how to find setups. So most of the time you're now down to how you enter the market, because most of the time when we do enter the market, it doesn't go as we plan. So how are we going to minimize those risks? And at what point do we actually cut our losses? Okay, so I will try to cover all of those today, inshallah. But the first thing that a trader needs to question yourself is you have to define what particular trader you are. Okay, there are three main type of trader, which is I think I have it over here. Okay, so there are three main um, types of trader. First of all is the scalper, which is myself. I'm more of a scalper. So when you know you're a scalper, you need to understand that you're trading on the smallest time frame, H1, M15, and M5, and how the market move on these smaller time frames. You need to be able to know how big the market is moving, and that will dictate how much you're trying to earn at this particular trade. Okay, so as I put over here, if I'm scalping, then I should be looking at about 10 pips to 20 pips. Okay, so let's open another chart. Okay, all right, so let's just go to M15, for example. So you need to you need to really understand how the M15 market moves. So let's just open it until here. So if you have any ideas of how to pull Fibonacci's and stuff like that, then that will have a good gauge of how you do things. Okay, let's just say over here on this particular bit. Okay, oh, let me just um, okay. So let's just talk about this small box over here. So there's a lot of ways how to pull Fibo, but let's just say I'm just pulling this Fibonacci just to find out where the TP is. Okay, so let me just, alright. So if you know for a fact over here is that as a BBMA trader, this is extreme and you have CS Arakuko. So let me just mark that for you guys. So okay, and we have CSAK or CSD in English. Okay, that's much bigger. Okay, so basically you have extreme, you have CSAK, and now you have re-entry. So re-entry is the setup that we're looking for if you are a scalper. So basically before you even enter the market, you need to be able to know how far the market moves. Okay, so let's just say for example that, okay, from this point to from the re-entry to this point is that's about 40 pips, okay, to be honest. So usually let's just go to this side again. Let's just check how far the market moves. That's about 40 points, 40 pips. Okay, from here to the top, that's roughly about, let's find a good sideways. Okay, this one's another one. So from here, let's just take the average of about, that's 50 again. Okay, another 60. Okay, that's another 40. So from top to low BB of M15, that's roughly about 40 to 50 pips. That's why if you want to be safe, you want to aim for 10 to 20 pips, okay, for a scalper. So why did I show that how you need to make sure that first of all you need to define what particular trader you are. You need to be able to know from how the how each particular pairs yep, hang on. Okay, so the first thing is very important, because if you define yourself as a scalper, then when you do trade as a scalping trade, then you need to make sure that you're monitoring the trade. You're not gonna leave the trade session while it's running, okay, because anything can happen in the smaller time frame because everything happens so quick. Okay, when you do go for intraday trading, then you're looking for setups at H4, H1. Okay, so those are the places that you'll be looking for in terms of setups. And if you want to be safe, then you should be aiming about 20 to 40 pips. And when you do go for swing trades, then you'll be looking on the setups of monthly, weekly, and daily. That's about 50 pips above. Okay, so how do you actually define? Hang on, somebody's having issue with the sound. All right. So when you actually have set yourself as, let's say, for example, intraday trader, you need to make sure that you are able to cater your trading style in accordance to what you're doing every day. Let's just say, for example, um, you have your own work. Let's say you're working from 8 a.m. to 7 p.m., for example. Then the only time you're going to be trading is at night, and you don't have much time in the day. Then don't bother becoming a scalper, because you don't have the time to do all of those things during the day. Okay. But if you're, let's say that you don't have much time to look at the market throughout the entire week, maybe 2 or 3 days in a week that you'll be able to do this, then I suggest that you do it. You go for a swing type of trader, because when you go for swing trades, obviously the retracements are big, and you need much better margin maintenance. Okay, but all of this trading style is based on your own personal um, schedule, because you need to be able to make sure that you have the time to actually analyze the market, you have the time to actually monitor how the market is moving, and so on, because you need to know how the economy is doing. Is there any news that's going to come? Is there any setups available that is against your previous entry? So when you do go for setups, these setups, they can be canceled by another setup. So you need to be able to make sure that you have the time to analyze the market and maintain your monitoring of the market. So that's why it's very important that you make sure that you know what time is the best time for you to trade, and what particular trading style, and how much are you trying to achieve in this particular setups that you're going for. If you're going for a M15 re-entry, you do not, for example, you do not hope that this is going to go 100 to 200 pips, because that's not how the market moves. Okay, but if your entry is a daily entry or an H4 entry, then obviously that's a much more rational way of thinking, because you know that daily setups might go 100 or 200 pips down or up. So you need to make sure that you are going for the setups that caters to your own time and your own trading style. Okay, do not go into setups that is not does not favor your own trading styles. Okay, all right. So now that, let's say, for example, this is my own plan. Okay, this is how I do my trading. I define myself as a scalper because I don't like waiting, and I'm not a very patient person, so I'm more in a high speed end of things. So I will go for lower time frame instead, for example. Okay, so if I know I'm going for scalping, then I should go at H1, M15, and M5. So now, once I know that which time frame I'm going for, then I know my targets, because now I can rationally say to myself that, okay, my target when I do scalping is about 10 to 20 pips. Okay, all right. So all right, so let me just share this bit over here. So now that I have already have my trading style, my targets, now I need to do my money management, which is what I do over on this side. Okay, so basically, let's just say, for example, that I need to set myself a rational target. Okay, so let's just say that I have put $100 on my account, and I would want to set a target of growth in this account. So obviously everyone would want to have profits. Okay, so because of my own experience and my own capabilities, I just set myself up for a 20% monthly target, because 20% is a much more achievable goal than just setting it up to 100 or 50%, because that will that will put some more pressure on yourself on trying to achieve those bigger targets. Okay, So let's just say I said to myself that, okay, I have $100 and I'm going to set 20% monthly target. So 20% of $100 is about $20. Okay. So after 1 month of trading, that's about 20 days worth of trading, I will need to raise my account to about $120. So in order for me to achieve this target, if you divide that by the number of days that you have on a particular month, you're roughly about you just need to earn about $1 per day. So by calculating these numbers, by dividing them by making it much more what do you call this much more achievable on a daily basis, then it's much more easier for you to achieve $1 a day, because I'm pretty sure that all of you out there will be able to achieve more than this in a particular day. Okay, so let's just say that we want to achieve $1 a day, because that is how we want to grow this account. And by 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 building this account 20% on a monthly basis, you are setting yourself up on a slower pace, kind of growing your account. However, it's a much more achievable goal and lesser risk in terms of how it will um, affect you mentally, and also your psychological and effect on yourself when you actually push yourself to achieve a bigger goal. So if you set yourself up for a much more achievable goal, then inshallah it's much more easier for you to achieve this stuff. Okay, so according to this plan over here, I have $100 and I will only use 1 cent slot, because if you use 1 cent slot, ultimately at the back of your head, that if the market goes away from your entry, you can able to sustain about 1,000 pips before you blow out your account. So I'm pretty sure that the market will not do 1,000 pip in a day. So let's just say the market goes away from you, let's say 40 pips. It will retrace again, and when it retraces, that's when you need to decide whether you need to take your profit or you need to cut loss. So that's why it's very important that you maintain your margin at 1,000 to 1,500%, because that will make sure that you don't blow your account, and you'll be able to sustain the retracement that the market does. And when it does that, you are not going to pressure yourself by blowing this account, because you know at the back of your head that this account will be able to sustain 1,000 pips movement. Okay, so that's risk mitigation over there. So if you set yourself up for 1 cent lot and about 20 pips on a daily target, okay, because I said earlier on I'm going to do scalping on this one, so I set myself up for 20 pips per day. So roughly minus the spread and all of those stuff, let's just say that we're earning about $2 per day. And that's why we need to create two accounts, because this is the grow account, the $100 is the grow account, and you have a bank account. The bank account is much more on the withdrawals that you're gonna do, because you're earning about $2 per day. So you only need to grow your account $1 a day, as we already have calculated earlier on. Okay, so if you earn about $2 a day, then $1 will go to the withdrawal, goes to the bank account, and the other dollar goes to your capital. Okay, so if you do this every day for the rest of the month, then obviously you're just trying to earn 20 pips a day, which I'm pretty sure everyone will be able to do. Okay, so you eventually will raise your capital to about $120, which is your 20% target, and without even noticing it, you're also having an extra $20 in your bank account because of the withdrawals that you did. And this you add on to your capital right now, that's about $140. So without realizing what you have achieved, you actually achieve more than 20%. That's about 40% growth on your account. But what you need to put in your mind is that you just need to make sure that you have $1 a day on your particular entry. Okay? So let's just say that, okay, let's open this one over here. All right. Let's just say that you entry sell at this particular, let me find a good setup over here. Okay. Let's just say you entry sell at this particular setup over here. Okay, let me just, all right. So let's just say that we sell over this place. Okay. So when the market move, because obviously this is an H1 setup, but obviously this is a re-entry sell for H4. So let me go to H4. There it is, the re-entry sell for H4. Okay. So we go back to H1. So basically this is a setup for an H4 re-entry sell. Okay. So it's much more on a intraday type of trading, but we're still gonna scalp based on this intraday entry. Okay. So let's just say the market goes down after you have sold it for about, that's about 10 pips over there. Okay. So after it went to 20 pips, what you need to make sure that you do is that you lock your entries at half of at your target. Okay. So when you reach your target of about 20 pips, for example, sorry, because your daily target is about 10 pips, then you lock it at 10 pips once the market has already gone down more than 20 pips. Okay, so you lock it at 10 pips and you let it go for a while. Okay, so even if the market goes back to this 10 pips during this few hours, then you know you have already achieved your daily target. Okay, hang on, let me just, somebody's having issue. All right, so once the market has moved again for another 30 pips, for example, then it's time to move your stop loss to about 20 pips. So now your daily targets is already achieved because, okay, so now you already have achieved your daily targets. Okay, and after this CS Arakoko based on BBMA, you have a re-entry over here. Once that re-entry, when it reaches low BB, when you don't have any more momentum, that's already a signal that tells you that you need to make sure that the lower time frame doesn't have an opposite setup, because you will know that there will be a reversal. Okay, so when you don't have any more momentum, you should be aware of this, because this is a sideways BB. Sideways BB, obviously when a candle rejects or break low BB, it will have opposite movement towards middle BB. So that's very important. So now from your entry point to this point over here, that's about 60 pips. That's more than that you would wanted to have on your entry on a daily basis. Okay, so when the market moves, let's say that's about 60 pips over there, then you can actually have move it to your CSR Rakuko, to be honest. Okay, so that's about, let's just say for example 40 pips. So it's very important for a trader to obviously always lock your profits, because the market is volatile at some point, and obviously you need to make sure at what particular time of the day the market opens. Okay, and this is very important because that's when there's a big market movement. Okay, however, that's not the point today that I want to make today. What I want to make sure that you all know exactly when to enter the market and when to get out of it. Okay. So if you have no idea how to get out of the market, then based on this plan, you already have set yourself a target. So we shouldn't be greedy in terms of what we're trying to achieve on a daily basis. Is what we need to make sure is we achieve our own targets. Okay. So let's just say H1 is on a sideways BB, and you have the first candle over here rejected the low BB. So you need to make sure at M15 that there is no opposite setup. Okay, for example over here. Okay, so as soon as I have seen CSD, okay, Candela Rakuko buy at M15, then I know for a fact that okay, I think I need to get out of this trade because I'm a scalper. Then as a scalper, if you have an opposite signal that tells you there's about to have a new setup, then you have to be careful. Okay, because H1 tells you that this is a sideways BB. Okay, so sideways BB, obviously the market's going to go back to middle BB. So that is one thing that you need to be able to analyze yourself. And another thing about that is after the re-entry at H4, there is no momentum at this point. So that's another giveaway over there that tells you that the market might change. Okay, because right now there is no momentum at low BB after the re-entry. Okay, so that's one of the first indications of market reversal. Because if you check the channel, my channel, I already talked about dojis and stuff like this. So the doji formation at the end of the market, those are the things that actually have early signals that tell you that there's a market reversal that's going to happen. Okay, so it's good to know some of these things as well. All right, so let's go back to the daily target. So now we have already set our money management, and we already have set our plan, our daily targets, and obviously the most important thing on trading is basically the discipline, because you need to make sure that you discipline yourself in terms of what you're trying to achieve. Okay, and if the market does not go as to your plan, then you should be able to adjust based on that. Okay, so let's just say this is the market that you entry, and after CSR Rakuko, you can pull your Fibonacci, and you know that it has achieved TP1. So based on a scalper, for me, from re-entry point to TP1, that's about 20 pips, to be honest. So let's just say that the entry is over there. So that's about 20 to 30 pips. Okay. So that's one of the good things of having other techniques to help you filter out your entries. Okay. But what you need to understand that if you're scalping, then you should base it on scalping. You should always lock your profits at the end of the day, because that, even if you lock your profit at 5 pips, that is still a positive entry. Okay, you do not let the market ruin your plan, and if it doesn't go as per your plan, you should know when to get out of this market. Okay, all right, so that's the discipline part of it, because when you do entry, when it goes away from you, then you should have a set plan. For example, okay, let's just go to this entry again. So when this entry happened, okay, then you are confident that the price is going to go up. However, let's just say, for example, that the Bollinger Band goes up, and the next candle become a momentum, CSM. So when the next candle becomes CSM, then you need to decide what is it, what's going to happen after that. So before you decide cutting your loss, you need to make sure that you know what the market is trying to do. Okay, for example, over here. All right, let's just say that you sell at this particular point, and you know that it's going to go down. However, the market did not do this particular movement. So how do you bail out of this particular trade? So you don't just bail out when the market goes away from you. You need to make sure that you have a set plan. So you need to be able to assess what the market is trying to do. Based on basic BBMA, let's just say Bollinger Band basics, that its main function is to contain all the candles and moving averages within the Bollinger Band. Over here you have two extremes. You have a candle that's outside of the Bollinger Band and you have moving average outside of the Bollinger Band. So obviously you know for a fact that is going to go sideways, okay? Because in order for the Bollinger Band to put back the candles inside the Bollinger Band, then the candles need to go sideways. Hence, there is a giveaway over here that tells you that the market is being stopped moving upwards because it needs to go sideways. And when the market goes sideways, you need to understand that it is creating a re-entry. Okay, so if you want to bail out of this sell entry, because this candle over here is another signal, it tells you that this is the first CSM, and every first CSM will create a re-entry, and that's a very big giveaway over here. You're on the wrong end of the entry, and then there's a CSM buy over here, so you can either cut loss over here or you want to make an assessment on your lower time frame. For example, this is H1, so let's just go for this particular bit over here. So we go to M15 and we look, sorry, where is it? Okay, so we look at M15 and we know there's a MHB setup over here. Okay, so MHB setup, obviously your entry is over here, and usually MHB, they always aim for middle BB. So as you can see over here, your entry is roughly just above middle B, just below middle BB. So you know the market is going to retrace to middle BB or maybe low BB. But SOP based on MHB entry, when you entry sell at MHB, your first TP should be at middle BB. If the market rejects middle BB, that's when you should cut your losses or take your profit, because rejecting middle BB, this is a re-entry buy in another sense, because now as you can see over here, this candle has rejected MA5 low, MA10 low, and middle BB, and based on basic BBMA, this entry over here, this re-entry candle over here, this is a minimum of 3 candles up. Okay, so as you can see from this re-entry, the market has moved more than 3 candles up. Okay, so if you're going sell on this particular juncture, you need to make sure that when you see this, that is when you need to decide that, okay, I need to cut my loss at this particular juncture, because from your entry point, that's about 13 pips, 12 pips. So you just lost about $1.20. Okay, so if you're earning about 20 pips per day, $2 a day, I'm pretty sure that whatever you have gained from the past few days obviously can sustain any small losses that you do, because the most important thing over here is to minimize your loss and maximize your profit. Okay, so is there any when it comes to the planning wise and setting your targets, money management and discipline, is there any question before I move on to how we do our identification of market opportunity, analyzing the market, setting up yourself for the entry, and obviously the maintenance of the entry? Okay, so Hassan was asking, what do I mean by 1000%? Okay, what I meant by 1000% is the margin of your entry. So if your entry if your margin is above 1000%, then you have a buffer of security in terms of sustaining the market movement. So as I say in this example, that if I have $100 and I'm only trading 1 cent on a particular day, then obviously is even how big the market movement on a day is not going to move more than 1000 pips. So I'm pretty sure that I'm not going to let the market move away from me with that bigger number. Okay, so what I'm trying what do you call this what I'm trying to tell you is that you need to make sure that when you trade, you do not put lots that will jeopardize your money. Okay, so you only trade with smaller amounts to make sure that you have smaller loss and the risk is not as big as it is. Because for me as a trader, I do have two types of trading. One is as what I'm showing to you right now, and the other one is high risk, high reward. So high risk, high reward, I'm not gonna teach you right now, because what I'm trying to teach everybody now is to come up with your own plan as what I'm showing right now, and be consistent at on it first, because the main game over here is about consistency. Okay, so when you're able to maintain consistent flow of pips per day, let's just say you're constantly earning about 10 pips per day, and that is already for me a very good successful trader, because you don't need to become a millionaire over a period of few days. Okay, this is not a sprint. Okay, this is a marathon. You need to do this very slow and very controlled manner, and you need to be able to make sure that you minimize your risk in terms of identifying the market and how you enter the market. So there's a lot of ways how to trade, but what I'm showing to you right now is a set plan that is very achievable. And another thing about this is you're taking a lesser risk and a much more achievable goal. Okay? Okay. Okay. Why is it better to open multiple position with smaller lot size versus one big lot size? Okay, so I'm pretty sure that basically this is much more on how you see the Southeast Asian crowd trader versus the European and the American side trading style. Because based on the European, American, and the rest of the world, most of them just put big lots at one particular place. And when you go to Southeast Asia, you go to Malaysia, Brunei, they go crazy with smaller lots with lots of entries. Okay, so what's the what's the good thing about it and what's the bad thing about it? Okay, so it's all, to be honest, if you know that you're entering at the pinnacle of the entry, then you should put just one big lot at that pinnacle entry, and then when there's a new re-entry that on the market, then you should entry another lot. Okay, so what everyone is doing right now is they're bombing with smaller entries. At the end of the day, it's going to be still the same. However, the risk that you're taking on the smaller lots is much more lesser. But when you go for bigger lots, then you have a bigger risk. However, you're only managing one big risk according to a lot of entries, and then you need to be able to sustain the market when the market goes away from you. So to be honest, as of I see it right now, you should pace yourself. Do not do not be amazed of what everyone is doing, what you can see on the screenshots of profits and entry. What you should be thinking about right now is what suits you best. Okay, this is not about how you're gonna show it to the rest of the world, but at the end of the day, what you're trying to achieve is money that you will feed your family. It's not something that you will show to everybody that I am great. Okay? It's not about being great, it's about earning money. And what I'm showing to you right now is you should pace yourself, you should manage your entries, and you should minimize your risk. Because based on that, then you should be able to become a much more successful trader. Okay, so if you have seen a lot of entries like that, that is based on everyone's experience, and based on their experience level and their confidence level, that's something that you should learn on your own. It's not something that people can transmit to you in a way. Okay, so I highly suggest that if you're a new trader and you want to be successful and you want to be consistent, because that's the key word over there, consistency. Because regardless you win 100 today, at the end of the week you lost 300, it's not going to be worth it anyways. Okay, so what we're trying to do here is to earn small bit by bit every day. It's not something that you want to win on one day and then you lost everything at the end of the week. So we need to be able to make sure that we are aiming for something with consistency. Okay, because if you want to earn on forex trading, then consistency is the most important thing that you need to do. And without discipline, that's you're not gonna get any more. You're not gonna get close to consistency, because as everyone has been telling me, all the gurus that I have, Faisal, Farid Adnan, he's more on discipline, because technique is just 10% of trading. Discipline is the much more important aspect of trading. Okay, so let me just go through the chat box over here. Uh, okay, Scott was asking that if someone is a full-time trader, is it realistic to aim a bit higher than 20%? Well, to be honest, the monthly target is based on your own capability. If you know you can achieve more than 20%, then you should set yourself for that. But what you need to set yourself is a goals or a target that you are able to achieve and you're more comfortable with. Do not set your targets more than what you are usually doing, because that will give a pressure on yourself. And when you are pressured, then that's when you start gonna lose. And when you lose, you get more frustrated, you get more pressured, and eventually you'll blow your account. So my my own system is, if I lose two trades in one particular day, I will stop everything. I wouldn't even trade. I'm just gonna look at the market and refresh at the night, find out where I went wrong, and then refresh again on the next day. Okay, so that's very important. So you don't force yourself to win trades on a daily basis, because at the end of the day, it's not about it's not about gaining every day, because not every day you're gonna win your trades unless you have already consistency on identifying your setups. This is the much more important thing that I'm going to talk about on the next one. Okay, so let's move on. So first of all, we need to identify possible market opportunity. Okay, so let's just say I'm a trader and tomorrow is Monday. So you need to make sure that you already done your homework before the trading day. Okay, so you need to be able to project where the market is going, and you need to be able to know and decide what happens when the market as your at your zones of selling or buying. So I will try to do that in this session. So if anybody would want to ask, maybe suggest any pairs that you would want me to look at in terms of possible market opportunity. So I leave it up to you guys to give me suggestion. Anthony UJ. Okay. Okay. So let's go to Let me just put this to the side. Okay, EU, USD, CHF. Okay, let's just go to UJ first, okay? All right. Okay. All right. So UJ. Okay. So I will try to do this slowly, but obviously this is a recorded session, so you guys can just go through. So regardless, I'm a scalper, intraday, or a swing trader. I usually do my analysis from the very biggest time frame. Okay, so I will specifically go to monthly first, so I would know what's happening on a monthly time frame. So on a monthly time frame, what I can see is obviously a sell setup at the beginning of over here. So you have CSD, you have MHB, you have CSD, and you have CSM. And then CSM, you didn't have any re-entries at all. And obviously you have re-entry and CSD over here. So right now, as I can see it, this is much more on a selling area because of this particular setup over here. So for me, this is a big giveaway because this is now what we call bearish engulfing. So if you have a bearish engulfing on a bigger time frame, then you know the smaller time frame is going to follow the direction of this market. Okay, so I highly suggest that you Googled if you don't know about bearish engulfings. Okay, so we know for a fact that the monthly is a bearish engulfing and you have a candlestick direction. Okay, so let's go to weekly in terms of this market. So on a weekly time frame, you have um, MHB, and then you have CSD as well, and you have CSM, and then there's a possibility of re-entry over at this point. Okay, so all right, so we know that the market is going because we have a strong sell signal over here that tells us that the market is going down, regardless of the MA is outside of the blinker band. Okay, so we go to daily. Then what we see on daily is there's a giveaway over here. There's a lot of information that I can see, obviously. First of all, that you have an extreme buy. You have obviously TP wajib, and then the market goes down. Then you have the first candle that couldn't break low BB. So this is what we call the second condition of MHB, because okay, let me just write this down. So MHB or MLB, okay? So MHB and MLB condition, the first thing that you need to understand is, one, you have to have an extreme, okay? And then two, you have to have CS that couldn't break BB, all right? So that is this candle over here. It couldn't manage to break the low BB. And then soon after that, you at the next candle there you have a reverse candle. Okay. Okay. So that's the third one. And finally, now we have, once we do have these two pair, the candle couldn't break low BB and you have a reverse candle, you need to mark the lowest body. Okay. When you mark the lowest body, is obviously on the lowest point. So I just mark this blue so I know for a fact that this is a buy zone. Okay. Alright. So let's just say that this is the MHB over here, and then you have a reverse candle. Any candles that goes through here is a buy entry because this is an MHB retest. So this is the fourth condition. Okay. Characteristics of MHB. So obviously right now you have a second retest at this particular point. So the second retest also tells us that there's another story over here, because now you know this is a sideways BB and you have a sideways bullinger band. So this candle rejects low BB. So based on basic BBMA, it's going to go to middle BB. And at the top over here, you have another giveaway that tells you that MA50 is outside of the Blinker band. So when MA50 is outside of the Blinker band of a particular time frame, it tells you that it is setting up for a re-entry. For this instance, it's above middle BB, so it's a re-entry sell on a much more higher time frame, which is weekly. So as I said earlier on, we know for a fact that there's a possibility of a re-entry sell over here. So if re-entry sell is on weekly, then obviously we need to find out the retracement levels of this market. Okay, so if I want to find out the retracement level, I usually go for the third time frame or even up to H1, for example. Okay, because I can't find anything over here. So let's just go to H4, for example. Okay, H4 is also indicating a reversal over here. You have a dodgy reversal and you have an MHB as well. Okay, so now we go to H1. So H1 can provide me with much more better in terms of Fibonacci, because you have a support level over here and you have bullish engulfing at this particular point. So you have a bullish engulfing, and obviously this is the support at which most probably the retracement will be going for. Okay, because this candle over here breaks this support. Okay, so this is for a fact that this is a bearish engulfing. Okay, so obviously the market will go here, and this should have been a selling area. However, this candle breaks through and also break middle BB. So when it managed to do that, this resistance point has now become again a support, because at the very beginning this point was actually a support, and the market breaks through over here and it becomes a resistance. Unfortunately, it goes back up and it breaks back, and there's a SNR flip again. Okay, so the possibility of reversal is over here again, retracement. So let me just pull my Fibonacci, because based on my Fibonacci, there are three ways of pulling your Fibonacci. The first is obviously if you have bearish or bullish engulfing. So if you have a bullish engulfing or any engulfing, then you should find the nearest support. So the nearest support is obviously this one. So you pull it from the body and to the wick of the lowest point. So let me just color this blue, so we know that this is a buy Fibo. Alright, so you can use your basic Fibonacci. To be honest, you don't have to follow the settings that we have here. So I actually said earlier on, right now the market has returned, going to the pullback. Okay, so obviously this support is roughly about on the max retracement. So what we have over here is obviously a zone at which the market is trying to go for. Okay, let me just draw this a background. Okay, alright, so let's just say that this is the zones at which the market is heading for. Okay, so now we have already analyzed the smaller time frame are trying to go up, because over here we know there is no momentum. You have a CSD and you have a possible re-entry buy over here. H4 as well, you have extreme and you have an MHB as well, and you have a strong doji that tells you, I forgot the name of this doji, but obviously this is a very strong doji over here that tells you the reversal. And obviously daily also tells you that this is a sideways BB and there's a potential of the market going to middle BB or top BB. Okay, because it has been for a few days now, few weeks, that the market hasn't gone back to MA50, because based on BBMA the market has to go back to MA50 at some point. Okay, this is a natural cause of things, because when we are using BBMA, we are technical traders, so we base it on things and facts of how the market has done before. So basically we are predicting the market where it's heading based on patterns of what had happened before, and based on this, based on the back test that we did, MA50 is one of the lines in BBMA that tells you that the market is going to go there at some point. Okay, so over here we know for a fact that this is extreme B, which is sideways BB, and it might go to middle BB or top BB at some point. Okay, we're not really sure. Okay, but right now H4 is already MHB and H1 has already have a candlestick direction, and there's a potential of a re-entry buy at this point. Okay, so now we go back to daily. So we know for a fact that this is the point at which the TP1 is roughly at that point and TP2 is at that point. Okay, and the full cycle of this Fibonacci is obviously at top BB. Okay, so when we go to the weekly time frame, then there's a possibility of the market going to TP2 and TP3. However, what we can see for a fact over here is basically the candles on the weekly time frame is already going sideways. Okay, so this is a strong indication of how things are going too. Okay, so when you do have the weekly going sideways, then obviously over here there's a sequence that hasn't happened yet. Okay, obviously there's no re-entry over at the first CSM over here, so there's a possibility of a re-entry forming up at weekly. Hence the setups, the buy setups on the lower time frame. So if you know that the lower time frame is going up for a selling point at which on the weekly time frame, then this is a good point for you to understand which particular trader you are. Because if you're a scalper and you're an intraday trader, then obviously you would want to go buy on this market, and then once you reach to that certain level of the market, then that's when you're gonna sell. Okay, so based on this weekly, okay, we know for a fact that there's a support line over here. Okay, for example, so let's just say this is the weekly time frame and it has been sideways for a while, and this is support lines, and right now this support line has been broken through over here, and at some point the market might try to go and test this support again, and now it will become another resistance, a new resistance, for example. Okay, so knowing by combining BBMA, support and resistance, and Fibonacci, it will actually help you to have a much more understanding of what the market is trying to do, and you can have much more better of market planning and also mapping of where the market is going. Okay, so let's just say for example that this is the zone at which that is now the support zone, and then it is broken through over here. There's a breakout, and this is a possible selling area on a much more higher time frame, which is weekly. So based on this weekly time frame, this is more on a swing type of trading. Okay, but if I'm a scalper, then obviously I'll be looking into a buy entry over here because I know the market is going up. So we need to make sure that whatever is happening on the lower time frame as well, we need to identify those setups as well. So if I'm a scalper, then obviously I'll be looking on a setup on H1, M15, M5. If I'm a intraday trader, then obviously I'll go for the re-entry, the MHB entry at H4. Okay, because I know the market is trying to go to middle BB of daily, for example. Okay, so these are the things that you need to do in order to identify the possible market opportunity. And then what we did just now is the analyzing of the market, and now since we already know where the market is going, where we are predicting the market is going, then we need to set ourselves up. So let's just say I'm a scalper. So based on this scalping, then I should be looking at a setup on H4, H1. So H1 has something to offer. Obviously, you have an MHB over here, you have a candlestick direction, and obviously you might have a re-entry buy at middle BB at this point, because this is also to the support levels of H1, and you have the pullback area as well. So basically, if I want to go for the buy, so it should be around that area over there. So now, if I know this is a buy zone, okay, let me just Okay, this is based on scalping. Okay, so if I'm going for scalping on this and I'm going for a buy entry, because these are support levels and there's a breakout and another breakout and now it has become another support. So based on this entry, then I would look for a MHB setup or an extreme at this particular juncture. So right now we have MHB, sorry, we have a sell MHB over here, and you have the market going down. So if the market's going down over here, I would go to M5 for confirmation, okay, of where the market is going. So what I want to do is I can still use my Fibonacci as well. So basically, this is also an ABC type of pulling the Fibonacci. Let me just go for M15. Okay, M15, this is the biggest candle. This is dominant candle, and then for dominant candles, what you need to do. So basically, this is the dominant candle. So the dominant candles, when you need to pull the Fibonacci, you need to have at least a minimum of 3 candles. Then you can pull it from the candle that actually breaks the body. Okay, so this is the dominant candle. So this candle actually breaks this dominant candle. So what you can do is you can pull the Fibonacci from that side, and I'm just gonna color it, let's say yellow. I know it's pretty there's a lot of things happening here, but okay. So basically, I already drew the H1 time frame Fibonacci, sorry, support and levels over there. And what I did over there is I pulled M15 retracement. So M15 tells me that TP1 of sell is over here. So there are 3 things that's telling me that I should buy over there, this place. Okay. So the first thing is this is a support resistance. So this is another support area. Second thing, that I have an MHB, CSD, and also a possible re-entry at middle BB. That's BBMA. And now I pulled Fibonacci at M15. Then it tells me that TP1 is also at this point. So there's a lot of things happening over here, and obviously at the H1 buy Fibo, we also have this as the area of a pullback. So there's a lot of things telling me that okay, I should buy at this point. So let's just say, for example, that tomorrow on Monday the market's over here and you want to buy. What you need to make sure that if you want to buy at this particular point is that at M5, because I'm scalping, at M5 I need to have an MHB buy over here. So that will be a much more safer entry for me, because when we do entry, the market is not based on support and resistance level, because we don't want to go for the pinnacle of the entry. What we need to do is we need to entry the market at which point it's much more safer for us. And when I talk about MHB, usually MHB, the market is already sideways. So when it's sideways, there's no momentum, because when you entry against a momentum, that's a much more higher risk. When the market is sideways, then you know if there's an opposite CSM, then you can cut loss at a minimal risk. Let's just say tomorrow that I want to do a scalping at this particular point, and over here at TP1 at the pullback support and resistance, I want to buy for H1 re-entry buy. Okay, I want to buy over here, but over here I have an MHB buy. Then I entry buy over here. At some point it has become a CSM. So when it becomes CSM, then I should question myself that what's happening at M15 and what's happening at H1. If H1 becomes CSAK, CSD sell, then I should understand that maybe this is going for sell again, because the majority of the time frame is obviously a sell, because MA50 is above middle BB, because you're going against the market at this point. But you need to make sure when you cut loss. So when you do cut loss is when you have a candlestick direction sell at H1. Okay, but obviously we need to make sure that we don't upgrade our entries based on this. Okay, so when we have our entries, and we need to make sure that we need to be able to know what the market is trying to do, so we just don't use the hoping technique instead. Okay, So let me just look at the questions that we have over here. Um, Set up pin bar hammer. Okay. All right. Okay. So basically on H1 time frame, the reason why we want to enter at this particular juncture is obviously you have a CSD buy and you have a potential reentry buy. That was our analysis over this one. And basically based on H4, in order for H4 to go up, it has to have a setup at H1. In order for daily to have a, to go up, then H4 has to have a setup and H1 has to have a setup as well. So basically what this is the starting point at which we need to enter for the daily MHB, to be honest. So if you want to go for intraday trading, then your entry should be based on daily. So when your entry is on intraday, or okay, so your cut loss should be when there's a CSM at daily. So when there's CSM at daily, then that's when you need to cut loss. That's the condition at which you should cut loss. Okay. But if I'm a scalper, if I know there's a CSD, a candlestick direction, CS Rakuko, then I know I have to make sure that I bail out of this because it's gonna go down again. Because when you're talking about retracement on a daily basis, is gonna go up to 60 pips, 50 pips, for example. Okay, so these are the things that you need to understand. What particular entry, what particular trading type are you using? So that will determine how much retracement you're going to go. Okay, so let's just say, for example, that on Monday this becomes, let's say I entry buy over here on M5 MHB buy. All of a sudden it becomes CS Arakuku sell. You do not go out of the trade as soon as possible. Okay, because what you need to make sure is you need to validate this CS Arakuku. Is this valid or not? Okay, so there's a lot of ways to validate this. First of all, you need to be able to see on a higher time frame whether the CS Rakuku is actually a re-entry buy, or probably there's a buy setup on a much more smaller time frame. So there's a lot of things on how you going to manage all of this. But what I'm trying to do over here is I don't want to confuse everybody. Okay, so let me just delete all of this Fibonacci rectangle. Okay. Oh my goodness, I think I deleted everything. All right. Okay, so right now, as I said, based on this, sometimes the lesser indicators we have, the much more clearer that we can see, but I already have narrowed it down to this particular point at which we're going to go for buy, for example. Okay, so if I want to sell, I already know that basically this is the point at which I'm going to sell because of the support levels that it has done on the previous um, time. Okay, so the weekly is going at that particular point. Okay, and based on this weekly time frame, there's also another giveaway that tells you that MO50 is just about to cross over on top above middle BB. So that's a confirmation of a trend change over there. So this weekly will become zero loss sell. Zero loss sell is based on MA50 above middle BB, and all the moving averages are within the sell zone, because the sell zone is between middle BB and low BB, and the buy zone is between middle BB and top BB. These are all basic stuff. Okay, so what you need to understand is you need to make sure that based on your what do you call this, based on your analysis, you need to always make sure that you stick to the basics. Okay, because sometimes basics is actually a lot powerful than you actually thought. All right, so that's UJ. It took took a while, but that's how I usually do my analysis. Is based on a lot of things. I start from the monthly. I want to make sure where this market is heading on a longer time frame, and what is it trying to do. So let me just quickly um, talk about on what we have already achieved. Okay, so basically on the monthly time frame, just now we have identified that there's bearish engulfing on this particular month, and on the weekly time frame we know this is going to be a zero loss sell, and there's a potential of creation of re-entry at the support level, which becomes a resistance over here. And to support that re-entry sell over here, the market has to go up. So in order for the market to go up, you need to have setups on the lower time frame, which tells us right now that there's an MHB buy at daily. Okay, MA50 is also outside of the blinker band. So usually when you have these two things, it tells you that there's a possibility of setting up of re-entry at a higher time frame, which is weekly. H4 also dictates that there's a potential of reversal because there's an MHB as well, and there's a strong indication of a doji over here. I will find out what particular doji name is this, but as long as a doji, I'm pretty sure that we can use this as a reversal indicator. And obviously at H1 we have already identified that there's a potential support zones at which we can go for the buy entry. So that is how I narrow down all of these things. But because I'm a scalper, I want to go down to the minimum, which is H1, M15, and M5. So because I want to go for the H1 re-entry buy, so I need to go to M15 and find out the retracement level. So I need to find out where this market is going. So I pulled the Fibo based on TP1. That's exactly where the H1 re-entry, H1 buy Fibo also goes for fullback, and also M15 TP1. So, and based on the fact that it's actually landed on the support itself. So there's a lot of things that you can use to solidify your analysis. So when you do have your analysis, then now it's just a waiting game. So when the market opens, when the market is already at the potential zone of your buy zone, then you need to wait for the setups at which time frame you should enter. So if I'm a scalper, I'll go for MHB buy at M5. If I'm an intraday trader, then I would probably wait until H1, M15. But if I'm a swing trader, then my entries should be based on daily. Okay. So that's UJ. It took a lot of time, but inshallah, I hope that it was helpful in a way. So what else can we talk about? Okay, so now we have identified the possible market. We have already analyzed, and we already have set for which particular setup we are going to entry. And based on the entry, let's say for example UJ, I want to go for M5 entry. So that's a scalping type of trading. So I would aim for 10 to 20 pips and lock my profits at that particular juncture. So usually people have found it hard when to actually lock your profits. So for me, as long as I can lock my profit as soon as the market does its retracement. Okay, so let's just say for example that I have bought the market at this point. Okay, so I will never lock my entry over here when the market goes up, because I know it's gonna retrace back eventually. So what I need to do is, sometimes I usually use about 20 pips. When the market goes to 20 pips, I will lock it about 10. Okay, and sometimes when the market already retraced back to the potential support and resistance. So let's just say for example that this is the support level that we're going to another buy entry. So when this thing happen, and then when the market goes up again, that's when I actually lock my positions over here, because I know this has already been tested. So I would probably lock it about 30 pips, for example. Sorry, about 20 pips over there. So that's when the market goes up, and that's when I will lock the market, the entry, because I know this retracement has already been done. So you don't put your lock right next to the support, because that is a jeopardy to you. So for me, because this is the lowest that it has tested, so I would make sure that my stop loss should be somewhere around here, lower than this. So that's about maybe 5 pips, for example, to start with. So that's about 5 pips. So you should do this in a much more rational way, because you know that the support and resistance levels are the point at which the market's gonna go back. So when you do this, then you should be able to know when to put your stop loss plus or your break even. So people always ask me, when do I cut loss? When do I put my stop loss? To be honest, I have never put the stop loss unless I'm going to sleep. Okay. So when I enter the market over here, let's say for example, I want to buy at this particular market. Let's say the market goes down, I will not cut loss until there's a CSM sell. So CSM sell, you can define it when the candle has closed. Until the candle has closed, that's when your decision should be made. It's not something that you can put physically, because BBMA is based on dynamic indicators. Because all the moving averages, even the Bollinger Bands, are dynamic. If you're a support and resistance trader, then it's based on support and resistance. They are more on um, static indicators. Okay, so BBMA is much more on dynamic, so you need to make sure that the candle has closed. Okay, let's take a quick 5-minute break, and then after 5 minutes, we'll look into another market, inshallah. Okay, shall we continue? So, my my teacher, also one of the teachers I have here together with us is Radin. So he's here with us as well. So he's much more on support and resistance type of technical trading. So he suggested that we look into GU for next week. Let's just see. All right. So before we continue, is there any question with regards to everything that I have covered earlier on in terms of the plans and how you define setting up your targets, money management, even how to set yourself up for the market entry? Is there any questions? So I'll just open it up for another 5 minutes for questions, just in case that there's anyone that requires um, some stuff. Okay, so Azman was asking, the function of MA50 in monthly is to define the major trend. Do you also need to consider in lower TF? Okay, so the function of MA50 is based on each particular time frame. It's not just on the monthly time frame. It's not just on weekly. It's based on each particular time frame. So if I'm looking at, let's say, for example, that let's say H1 at this particular juncture. Okay. So on H1, you have MA50 going above middle BB. That's an indication of a sell zone. Okay. But over here, as we can see that this is an uptrend because MA50 is below BB. And whenever there's an extreme at the region of the MA50, there's potential buy setup on a much more high time frame. For example, that there's an extreme over here. There's also an extreme at lower BB, and there's also another extreme over here. Okay, so these are in H1. So basically, when I look at H4, these are set up on H4 re-entry buy. Okay, so when we look at H4, so basically these are the re-entry buys that we look into earlier on. Okay, so as you can see over there, so these are indications that we have. So right now, I'm just jumping to it. So right now we have this extreme over here on H4. Okay, so basically on H4 we have this, and we have a dominant candle over here. Let's just see what it tells me. So basically this has gone to the TP1 already. Okay, so it already has tested this particular support zone. So this is actually a point of which support and resistance traders have actually entered their buy entries because of the potential support zone over here, because this has become a resistance, and then there's a breakout, and then this is the retest. Okay, so let's just say, for example, that this is the initial resistance point, and this breakout the support becomes a resistance over here. It has become resistance for a while, and then there's a breakout. Then the breakout, there's a potential buy entry over there. So this is actually a buy entry for H4 because of the re-entry buy at daily, as you can see over there. Okay, so even at the smaller time frame, we can actually identify all of these setups. But over here, as my teacher Radin has told us that we can be looking for buy setups at GU for next week. So if I go to, usually I go for monthly, as I said, when I do my analysis. So I'll go for monthly first. So based on this monthly, this is a buy setup, and there's a dominant candle over here that has been broken through by a series of candles. So the minimum is 3. So the third candle is this one, for example. So obviously I will pull my Fibonacci from here. So I will just color it blue, and I will only have visual it on monthly. So when I go to lower time frame, it doesn't show. Okay, so based on this is dominant candle. It took more than 3 candles to break through. So this is the candle that breaks through. So that's where I put my Fibonacci. Okay. Oops, sorry. Let me just do it again. So let me just put it on monthly so that I don't see it on other time frames. Okay. So basically, the market has already broke through the TP1. So obviously, the next point should be at the TP2. Okay. So that should be the point at which there should be potential engulfing over here. So engulfing, there's a resistance point at which it correlates to the market going up at this particular point. So we know that there's the potential of this market going up to this particular point. Okay. So when we go to weekly, obviously we have indications of zero loss buy, because MA50 is below MA50, and we have CSM buy over here. So it has a potential of re-entry buy as well. And over at daily, the daily is still on zero loss buy because MA50 is below MACD, and you have CS direction, and you have a re-entry. Okay. For daily to go up, you need to have a setup on H4, which is this extreme over here. And if you look at H1, then there's a potential of retest of the MACD over here. So let's see, because this one is still a sell setup on H1. So on Monday, let's just wait for a buy setup on H1. Let's say, for example, an MHB at H1. So that's when we should go for that buy setup. So if I look at M15, then what we can do here is basically this is much more on a sell zone on M15. But let's see what happens here. If the market retraces back to this particular zone, then that's another point at which we can enter the market for GU. So those are the things that I usually use. I usually combine BBMA setups and utilize Fibonacci retracement to find out where the market is heading. And obviously, in order for me to have a much more solid analysis, is obviously I have to correlate that with the support and resistance, because if I have all of this analysis pointing to the same stuff, then you know that you have a much more confidence in your entries and stuff like that. Okay, so I think that's why we need to go to, that's what I look for on GU. So is there any other question for this session before I end the session? I was, okay, let me just open another one. So I was just looking for USD CAD earlier on Friday night. So I noticed something that might worth mentioning as well. So on a monthly time frame, there's a sell possibility over here. Okay. However, there's setup. There's an extreme over here. There's a potential MHP buy at lower BB. So this is a particular setup of a buy setup over here. So this week's, this month is a potential CSAK, but it's not yet until we need to find out where the market is heading. So based on the weekly time frame, we have an MHB. So we have a head and shoulder setup. We have the shoulder over there. We have the head, and then we have another MHB again over here. So basically, we need to find out what the market setting is. So, usual, I can use my Fibonacci. We have a dominant candle over here. So this is broken by the third candle, so minimum of 3 candles. So I usually pull my Fibonacci based on this, and based on this, this is the area at which this market is trying to go. So if this our retracement level, then obviously I will go for a sell at this particular point, but it's not going to be a sell for swing sell, depends. But obviously, as you can see to the left hand side, that there's a support resistance over there. Okay, so the support resistance level available for us on the left hand side of this particular market. So we know for a fact that the market is trying to test that resistance again. Okay, so those are the things that I personally look into when it comes to this. So when you're a scalper or you're an intraday trader, you know the market setting over there, so you're not going to wait until the market is there. So obviously, you can look for setups on a lower time frame. So if you go to daily, then you have a potential CSM, and H4 doesn't have any setups available for us right now. If you look at H1, there's a potential buy re-entry over there, but I would wait until low BB at some point or middle BB for a re-entry, because obviously at M15 there's a potential sell setup. So I would wait what happened, and then we can buy potentially at the lower low BB H1. So there's a lot of things that you can incorporate in terms of BBMA, but what I highly suggest is basically you combine BBMA with support resistance, because now when you have support resistance being static and you have BBMA being dynamic, then you have best of the two types of trading styles in there. So it actually helps you to build more confidence in your analysis. So I think in that sense that I think we'll end the conference today, the webinar. So inshallah we can talk about much on the group chat, inshallah. So I think that's it for me. Thank you for listening, and it's about time the prayer time as well. So billahi taufiq wa hidayah. Assalamu alaikum wa rahmatullah, and thank you so much, everybody.